Hey everyone, hopefully having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. We're going to dive right in, take a look, see what's going on. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, I dive deeper into all these topics, looking for potential investment opportunities, sharing those opportunities with everyone in the community. We do have a coupon code that is active. The coupon code is special. Gets you 50% off the first month only on a monthly membership, and a larger discount on a yearly membership. And anyone on a monthly who wants to switch to the yearly can still use that discount, even if you used it on the monthly before. So, starting out with Market Sniper, and we've got our boy here, Michael Saylor. Michael Saylor's calling everything, all other investments, all commodities, all garbage. There's only one king commodity. It is Bitcoin, in his opinion. I don't even think it is a commodity. It is fictitious digits formed and being sold as nothing. It doesn't do anything. But Market Sniper has response. He says gold is garbage investment. Michael Saylor, the desperado who debunks portfolio theory by asking how many chairs are you sitting on, meaning everyone should be all in on one thing all the time. Oh, yes, and that thing is Bitcoin. Okay, Mikey. I used to think this guy was kind of smart, kind of when I was first listening to him. Then I started listening to him more, and I'm like, man, this guy could be like pretty crazy. Now, I think it's over the top, over the edge, but just an opinion. It seems like the more I follow him, the crazier he gets. John Solwald says, in today's TikTok world, folks, look at every blip as a sign of doom. In reality, the housing market is very boring and slow. Inventory and vacancy rose for years before the great financial crisis bubble burst. We aren't even back to normal from the crazy 2020 offers with waived contingencies nonsense of 2021. And again, guys, look where we're at. It's going to take a long time to get back up. And everyone that I see on Twitter, YouTube, Nick Gurley, the venture consulting guy, these guys are just spouting off. It's all doom and gloom. The Bravos research guy, um, who's that one girl? She's always on Twitter. Danielle DiMartini Booth. The other one, her name's like Lisa or something like that. They're always posting stuff like we're going to have this crash, 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 crash. I'm like, what crash? Like, this is in crisis level, just exiting crisis level to low vacancy rates. What if this takes a decade to get back up here? What if it takes 2 decades? I mean, we were in the last crisis level. What if we go back into crisis level? This was 70s. This was 1980. Crap, in 1992, we were barely above a out of low crisis inventory level or a vacancy level. It takes a long time, guys. And this is our U.S. total housing inventory. Yeah, we're really in a huge piece of trouble here. Now, could there be a couple of cities like Florida or some in Texas that are having problems? Yes. You're always going to have a few cities that are bad because that's how it works. A normal distribution curve, you'll have good cities, bad cities. But overall, yeah, we don't have any inventory. Could there be more inventory that comes? Yeah, there could be. And we'll see it go up. And then we can get more bearish as it goes up. The Crude Chronicles. So in 1970s, Schlumberger surged to become the second largest oil and gas company in the world, trailing only Exxon at the time. Consider this. Its market cap was larger than all but one of its customers. It was the stock to own, offering full exposure to the fastest growing oil and gas capital spending markets, particularly offshore in the North Sea, which was at the time the fastest growing market for oil and gas spend. Schlumberger ascent unfolded in three stages, each interrupted by a brief pullback. The initial doubt, skepticism about the cycle's existence, followed by a pullback. Rising optimism, growing confidence in the future, followed by another pullback. And parabolic euphoria, a final surge where everyone was fully invested, leaving no more wall of worry to climb. Today, there are striking parallels with Nvidia's rise from relative obscurity to the epicenter of the AI capex. The decade following Schlumberger's peak was not kind to the stock. Will Nvidia face the similar fate? It will. I can show you some fractals, guys. So I was looking at this. Here's Schlumberger. I grabbed Schlumberger's fractal. This was the big move in the 70s to 80. We had a big consolidation here. Well, actually, the consolidation is this here. It's actually that. It's a three-hump consolidation continuation pattern. 1, 2, 3. And then boom, flag pattern, boom. Another three-hump consolidation, boom. Now check this out. I took the fractal. The fractal's this pink guy here. That's the move. I'm going to copy it, go to Nvidia, and then post it on the Nvidia chart. All right. So let's blow this thing up and see what we got here. So I'm going to try my best to overlay the fractal. Look at this, guys. So the fractal is this move. If you guys can see it. So up, 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 the double hump, and then this is the big boom. So that is the fractal comparison. It aligns basically perfectly over each other. Yes, the magnitude of some of the moves here are larger than the other one. What that means is that the up move will be bigger as the fractal is bigger. So if I were to, let's say, scale this fractal to a couple of this, like the fractal here in this beginning there, you can see it, and then the double humps were here. And then it went roughly the same height as the size of this fractal. So what does that mean? What I'm doing is it's the leverage of the balance sheet. So think of it as the genetics of the balance sheet is the size of the fractals. Sometimes these things get distorted and other times it doesn't. So the size of this fractal here is a big boy there, this move. And then that is projecting the move up here. So that's what I did is I overlaid the size of this fractal in the orange pink, or I should say pink. And then it peaks here, which is right where we're at. So we'll see. Again, these things aren't perfect. And I think Nvidia is probably going to top out, but that's me. It very well could go. It could go higher. I mean, it's possible. But if we get in the right market conditions that I think are coming for commodities, I think the overvalued stuff was going to slow down, which Nvidia is included in. I think they'll probably get competition. Yada, yada, yada. There's going to be a lot of things that come. And I think it will slow down and eventually roll over. Part-time trader says very few are positioned for what is coming. Oil will outperform the S&P in a big way. Says I've already laid out my belief that we are entering a period of stagflation similar to the 1970s. This is how I see oil playing out versus the S&P, just like the 1970s. We could see a major stock market crash, wind with a generational rotation into gold, silver, and oil. So what this is I guess you could draw a line through here too, like a big wet expanding megaphone type pattern. We're super low, and he thinks that maybe we are going to go up where these circles are in the ratio of oil to the SPX. When I look at oil to SPX, I have a different ratio that it doesn't look anything like this. This is what I have. and it looks absolutely ridiculous. So this is what I see. Um, this is a long-term oil. We've got our fractals 1, 2, and 3, which all look very similar. We've got a falling wedge. And this thing, once it breaks, it's going to the motherland. This is probably one of the most important charts that I've ever seen. Regardless if this is a falling wedge or not, it doesn't matter. You still have the same fractals. If I were to grab this fractal and put it over here, that's the fractal that I think that something like this could occur. We could also grab this other one here. The size of this is probably what it will end up being, but that's your other fractal there. Something on the lines of this. But I think we're going to have a big move where oil outperforms the S&P 500. What does that look like? Well, that would be stagflation, potentially. Um, it doesn't have to be. It could just be a lot of inflation. It doesn't have to be a recession, but it could be. It very well could be. So this is a insanely huge setup. Looks really good. He's got XAG there, silver, the cup and handle breaking out, platinum. Yeah, platinum's ready to rip. These are all intertwined together. So number one, huge opportunity I see in hard assets. I think people are massively underestimating the shift we are witnessing. This is gold versus the SPX. First downtrend line is broken right there. And once that red resistance gives away, which is this guy right above us, I believe this is going much, much higher. We've got XAU to Bitcoin. This is also starting to break its downtrends and potentially work its way on up. We're very early in this move, which is good if you're an investor because you can buy the bottom. I think this is a double bottom. So you get a bottom here and another bottom here. And then you get a line going across with resistance. That's a double bottom pattern, basically forming. We talked about WTI, silver's the cup and handle that's ready to break. All these things add up to paint a picture. Platinum's got this big downtrend line that we're trying to break out of. They all say the same thing. It's not like these are all just by happenstance all lining up. No, there's a market condition that's coming that these are all lining up for. This is XPT divided by gold ratio. It says it's doubly exciting because it looks set to bottom in this massive descending channel versus gold. This potentially means gold outperforms the stock market and platinum outperforms gold. Yeah, I hope we get all the way back up to this top here. I will be so ecstatic if that occurs, if we get back to a ratio of like 2.4, because I would have made so much purchasing power gains against gold that I'll love myself. I will love myself for making the decision to buy it down in these areas down here. PLG, this is a individual speculative company doing a double bottom, a broken downtrend line. And then CMCL is a mining company with a super clean chart. Caledonia Mining. First Majestic, yep, it's going to rip. TLW, I don't know if TLW, Tullow Oil. Definitely an interesting setup. I don't know if I really like that one. I think there's better setups out there than these, but we're going to head on back here. The Great Marti, market braces for April 2nd and beyond. Below the jaws of death, market awaits resolution. Otherwise, it's a bloodbath. She's beautiful. So it's a breakout, and then you come back for a retest. Let me see what he has here. Rejected. Yeah. And then a potential rollover in the S&P. And I would agree with that. It does look pretty ugly. Silver on the yearly time frame all looks terrific. It does look good to continue higher. The only benefit of declining education standards is that many millennials can't read this chart. Otherwise, they would get angry. Intergenerational wealth, share of national wealth owned by each generation by median cohort age. Why would millennials get mad about this? One, there's nothing they can really do about it. Baby boomers, in general, old people are going to be rich. And you know what? I'll tell you a little secret. A lot of people that have made a lot of money would trade all of that money in to be young again. So think about that for a second. Think about people who would trade everything they got, be young again. So am I mad? I'm a millennial. I'm the oldest millennial. I'm a 81 birthday. So the millennials, I guess I'm the oldest millennial because 1981 is the cutoff. But yeah, I'm not mad. I don't really care. Doesn't matter. You play the cards that you're dealt, and that's all you can do. You can't, basically burn the deck. You can't do anything about it. You just play the cards that you're dealt, and you just go with it. Roll with it, baby. Roll with it. Coming now, one of the most underrated skills in investing is the ability to do nothing. Yep, how you make a lot of money. You don't do anything. It's JPM forming a head and shoulders top. Kind of looks like it, but tough to say. A lot of people they try to call these tops. It really depends on where we're at in the cycle. Um, Technical analysis is lethal if you understand the valuation behind the stock and you understand the longer term cycles. It can also be doubly equally lethal in a bad way if all you try to do is look at chart patterns. Because if all you do is try to look at chart patterns, I don't think it's enough. I think you need to know and understand the fundamentals, the sector, the valuations of the sector, the valuations of the companies. I think all of that matters. The more information that you have about the sector, the company, whatever it is, the higher likelihood you're going to make money. But you also have to be somewhat smart about it. You can't be a total tool bag and make a bunch of money. I mean, maybe you can get lucky. You can get lucky that you can't replicate it. Like, I'm sure there's a bunch of tool bags that have made a bunch of money in some of these assets that went up a lot in a short period of time, like Bitcoin and crypto and Farcoin. But can they replicate it across the board over time? A lot of these guys, they make a lot of money and then they just give it all back. It's the strategies that people deploy and the ability to not just keep it but grow it. And what people do is they'll make it very quickly in a very risky asset. It's basically the gambling mentality, and then they just gamble it away eventually. So they're kind of back to square one. Beta Beaker says 51% of voters think uranium spot hits 200 plus this cycle. Bring it. Says what price does spot uranium hit at its height this cycle? I think we're going over 300 a pound. I think oil is going to go over $300 a barrel, and I think they'll peak within a year or two of each other. I think it will peak late 2020s, early 2030s, is my guess. That is my guess there. Dr. Parik Patel says, so we take these DoorDash loans, combine them, and create a whole new instrument where investors can bet on whether borrowers will pay off their Taco Bell Crunchwrap Supreme within 12 months. I love it. I love it. I thought this was pretty funny. I actually like this guy that was The Big Short, right? I thought this guy was funny. That's CDO squared. Yeah, crazy. Wasteland Capital says zero signs of a turnaround at Nike. Genuine dog crap numbers, just getting crappier and crappier. Crap growth, crap margins, even crappier guide. China's down 17%. Jordan's dying as a brand. Worst large cap report and guide of the year so far. And let's look at Nike. I want to see what this looks like. The Nike's been coming on down. It looks like we've got a potential falling wedge. I was looking at it earlier. Looks like it's a three hump consolidation. So maybe it's got a little bit of that before it starts to break higher again. It all depends. All depends on how Nike handles the company. But Nike, I mean, this thing is it's been a beast. I can remember I had some Jordans I bought real cheap, and it was probably back here, 80s or 90s. They were I think it was 90 or 91 maybe. They were the black ones with the gray, and then it had red and purple on it. The purple and red on the back of the shoe. Um, those are the ones that I had. I got them for like $20 or something like that. My brother got a pair. He got the Olympics pair. So I think it was like 90 or 91, or I think it was 90, 91. So it must have been like somewhere up here. We got it at a store that doesn't exist anymore either. Can't remember the name of it. Back in Minnesota. But that could be a falling wedge that eventually breaks to the upside for Nike. Not that I'm bullish on it or anything. Buy the dip in solid resource companies. Canadian small business sentiment now worse than when Lehman collapsed. This is generally good buy points. 9/11, Lehman, COVID, and Trump tariffs. This is the Canada Small Business Confidence Index. So it's probably a good time to be accumulating something in Canada here. Zero hedge. The timing of any rebound here matches well with the Trump tariffs 1.0 analog. Yeah, it looks pretty dang close, the fractal. Yeah, we'll see. Maybe we get a little bump higher here in April or late March, right where we're at. Yeah, we'll see. Copper, super breakout, shortage or global demand coming back. That looks pretty dang good. What's going on here, boys? Nice little breakout. I like it. Thought for the day, the idea that home prices falling 30-40% would be good for the working class is the most chaotic take I've ever seen, and I've seen many. This shows how it worked out last time they fell, financially crushed 167 million owners to appease 4 to 6 million aspiring homebuyers. Hard pass. But here's the bottom 50%. This is the share of the total wealth. You can see back in the 90s, the bottom 50%, their share was much higher than the top 1%. And that crashed during the wealth distribution. It crashed pretty big during the decline of the housing market. But it's come on back, and we're starting to make way against the top 1% again. But if you get a huge crash, 30 to 40%, I mean, that's unheard of in home prices. But you get that, it's not going to be good for the normal working class person. Developed world, ex-US versus S&P 500. The rest of the world is showing relative strength over the S&P 500 so far in 2025, with the ratio chart breaking out of a 2+ year channel. Maybe we'll start to see the developed world, ex-US versus the S&P 500, start to outperform. XLE divided by RSP, energy divided by equal weight S&P, failed top. So energy looking like it's trying to work its way on up again against the equal weight S&P 500. Bullish divergence, still looking good. Let's rip this thing, baby. I'm ready for energy to rip. Let's do it. Thermal coal stocks over coking coal stocks. So coking coal is the metallurgical coal. Thermal is this, and it looks like thermal's breaking out against coking coal stocks at this exact moment. So we saw this is actually a pretty large. Now, here's one thing that I will say. This is a ratio. And when the ratio is real high like this, it's generally good to buy metallurgical coal stocks because they're cheap against thermal. Even though this is looking like it's breaking out, and it could break out a little bit, the question then becomes, on a ratio going back, generally you get these overvalued and undervalued for coking coal. And then conversely, undervalued for thermal, overvalued for thermal. We're an overvalued thermal. So even though it looks like it's breaking to the upside, it is a ratio. So you have to kind of, your entry point for thermal coal stocks is probably down here. And there is some entry points even in thermal if the chart looks decent and thermal coal stocks are undervalued. But I'm bullish on both coking and I'm bullish on thermal. I think they're both going to go up. Why is that the case? I am so bullish on oil over the long term that it makes me bullish on coal, and ammonium, and energy in general, natural gas. I think that we're going to struggle to increase energy production, and I think we're going to burn absolutely everything. So that's my take. I think everything's going to go up, and I think metallurgical coal is going to go up. With more money being printed into the system, that is inflation, and everything goes up in price. And that's all I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. We've got a question and answer session coming up today, 5 p.m. Mountain Time. I'll see you guys there. And that's all I've got. So we'll catch you next time. This is Finding Value.